Turning now to the broader markets with the NASDAQ lower for the sixth time in 7 days. The big underperformer today, some of the cyclical areas like banks and energy doing a little bit better. Joining us now is Guidestone Capital Management's David Spica and BNY Mellon Wealth Management's Alicia Levine. Good morning to you both. Alicia, love to hear your take on where we are here after several weeks of headline weakness in the S&P 500, a little bit of firming up of some of those other economically sensitive areas, but also a tough seasonal period. So are we through this or still in it?
So good morning. Nice to see you again, Mike. Look, I think that we're probably a couple of weeks away from stabilizing here. It is seasonally very weak. We're really right in the middle, maybe towards the end of getting all those earnings revisions downward for the third quarter. That's probably going to take the fourth quarter down as well. I don't think that's going to be a surprise, given where the data have come in over the last few months, particularly on the inflation front and the supply chain front. So once we get that out of the way, I think we're fine for the rest of the year. It looks like the market is set up for this quarter to have a cyclical and reopening bent to it. The data have already gotten better. The stocks have already moved. So as you know, this year we've sort of moved quarterly, ping-ponging between growth and value, growth and cyclical. Feels like the fourth quarter is going to move cyclical, and we'll see how long that stays. I think the question on yields is an open one, and whether we rocket higher or not really will determine how far that trade goes.
David, does that all fit with how you're seeing things right here, that yields moving up are so far still maybe in a benign level and saying something good about the economy, or is that potentially something that can continue to pressure the market?
I think near term, it's a good sign. You're seeing a steepening yield curve, which is indicative of expectations for higher growth, maybe some sticky inflation. But if we get through earnings season without too many misses, and clearly the supply chain issues could create some earnings misses, which would not be well received, I think we're set up nicely for a fourth quarter cyclical rally. We've got declining COVID cases. We've got the yield curve steepening. You've got the positive seasonality. And quite honestly, as long as the Fed isn't raising rates, there's no place else to go. And I think you're going to continue to see money go into the cyclical parts of the market.